Good morning. How you doing, Kevin and David? It's been a couple of days since I did a live, so I think it's about time. When did I last do one? The 3rd. Okay, so that was Wednesday last week. Today's Monday. Okay, in Australia at least. What time is it in the US? It's Sunday night, Sunday evening, 7:40 p.m. on the 7th of August, or August 7th. Crypto Digger, EGLD. Yes. Hell yeah, Crypto Digger. Let me check out that just for fun right now. EGLD. Tether, Binance. Let's go alphabetical so I can find it. EGLD. There it is. Yeah, damn, you're right. It is going very nice. It's one of those like under the radar type performers. It's just been making gains in the background there. Still, oh yeah, okay. So it's popped up above the range here. That's really cool. If you see this resistance line that it popped 2 days ago, that's really cool. And then you got the underside structure like that. So this was like a bear pennant, but this is the thing, even with Bitcoin, the market is so oversold that when you start to form a new like bear structure, like a bear pattern, eventually that pattern's gonna fail and it's gonna go the other way, just like right here. I mean, this could very well be a fake out, but yeah, this is what I'm sort of seeing for Bitcoin as well, because a lot of people are saying that Bitcoin's in a big old bear flag. If you go out to the daily, so this structure here, they say, oh yeah, this is a massive bear flag and we're gonna go down. Yeah, of course, there could be a chance that we do, but let's look at the oscillators to see if that's even, you know, feasible, or like, well, you know what I mean, to see if it's confluent with the oscillators. So on the weekly time frame, everything is poised to move up from here. We've got the Cypher B indicator. MACD is about to do a bullish cross, and it seems to be curling up to head north. So confluence on the weekly that we've finished this move down and we're going to start heading up. Now, also, let's see. Yeah, I think a retest of these lows that we were, or this ranging market that we saw around 30K, a retest of that is pretty reasonable, I think. But yeah, let us know what you think. So Bitcoin, let's have a look. So this high, or this low here that we got, set in this high that followed it right here. That produced this level of golden support if price was to fall. Price did fall, but look, it only got as low as 22,400. It didn't quite hit that pocket, which to me is bullish, and you can see that there's an inverse head and shoulders setting up right now as well. You've got left shoulder, head, right shoulder, neckline. So the neckline here is quite heavy resistance at the moment. Every time we come up near it, we get shoved straight back down, and that's what's happened in the last couple of hours here. you can see, you know, we've approached this blue line here, this $23,450 mark, and each time it's caused rejection, rejection, rejection. A bit of optimistic moves above it, but for the most part, rejection back down, rejection, rejection, and then, yeah, seemingly another rejection. So the more we knock on this line, the weaker it becomes. So over time, eventually something's got to give. We can see that we've changed the trend here from lower lows. So all these lows here have been lower, 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 and then boom, a higher low, another higher low, another higher low, another higher low, and then look, another higher low again. We've got the daily candle close in 15 minutes, so we'll see how we can close this day out. But yeah, to me, this structure here looks like a rounding bottom, you know, which is somewhat of a trend reversal. So we've come off this downtrend here and we're changing it into an uptrend here. So not to mention, yeah, all of the inverse head and shoulder type properties as well that it has. And we could still be setting in that right shoulder here, like we're still building it right here. And it could, you know, could come up here and test this. We need this to break though. The problem it's been having is lack of volume. The volume just has not been stepping in yet. So it's not to say it can't, but another thing I've noticed, check it out. So let's go to the daily chart. Let's mark off the weekend days. So this is the daily. Each candle represents one day, as we know. So what was the weekend? It was the 6th and 7th. So Saturday the 6th, Sunday the 7th of August. So 6th and 7th. Check out how low that volume is on the weekend. See that? Those two there. That's the weekend. Count back 5 days. Friday, Thursday, Wednesday, Tuesday, Monday. These two here, weekend. Let's count back again. Friday, Thursday, Wednesday, Tuesday, Monday, weekend. See that little dip? Friday, Thursday, Wednesday, Tuesday, Monday, dip on the weekend. Why is that? It's because the stock market does not trade on the weekend, so a lot of the big players don't participate in any market. They take the weekend off. They don't do anything. Friday, Thursday, Wednesday, Tuesday, Monday, weekend. Okay, so this one was a little higher. A little bit of action on the weekend there. Friday, Thursday, Wednesday, Tuesday, Monday, weekend. Look how low that is compared to the rest, everything around it. Friday, Thursday, Wednesday, Tuesday, Monday. And you can count this back for eternity, but you can see the pattern, right? Things are quiet on Saturday, Sunday. That's just the way it goes. So now that we're on the back end of the weekend, we've got Monday coming around. So Monday's a good thing, right? It used to be a bad thing, Monday-itis, but it means things are gonna pick up in volume. Fingers crossed that it's positive volume, that it's bullish volume, like, you know, people are stepping into the market again, but and we don't get a giant red candle like this one. But for the most part, I think the majority of action happens, you know, Wednesday, Thursday, Friday. That's when you see the more higher volume. Because I think the smart money waits to see what retail does on Monday and Tuesday, because they jump the gun a bit, you know. They get the FOMO. And then the smart money comes in on Wednesday, Thursday, Friday and crushes them and, like, you know, rips it the other way or whatever. That's one theory that I've heard anyway. So Friday, Thursday, Wednesday, Monday, Tuesday, Monday, weekend there. So that weekend was big. That's when we got our all-time low. Or, sorry, not our all-time low, our yearly low of 17,622. That was a Saturday for me. Probably like a Friday night for you guys. There's another weekend there. 1, 2, 3, 4, 5. Another weekend there. Look how quiet that weekend was. In volume. Have I done that right? Yeah, it looks to be about right. But yeah, if you go back on any point in the chart and you can see this looks like a weekend here, the 15th and the 16th of January. Let's see if that was. Yes, the 15th and 16th of January was a weekend. The two little volume daily candles there. There you go. Just randomly going back and seeing if you see a pair of candles that are small compared to the rest, it's likely a weekend. These two here, you reckon they are? 17th of October, 18th of October last, or 2020, that was. Let me just go back in time here. October 2020, and what did I say? 17th, 18th? Yes, it was. It was a Saturday, Sunday, right there. So there you go. There's all the evidence you need that volume tends to be a lot lower over the weekend. So give yourself a break. You know, keep your alerts happening if you want, like on your phone, but you don't have to sit in front of the computer all weekend staring at the charts hoping that it's gonna rip. Because more often than not, it's gonna be quiet compared to the weekdays. All right, so let me delete all these Saturday, Sunday lines. Get back to what's happening. Okay, we've had bearish divergence. You can see that from this line here on the cipher indicator. Let's go down on the 4-hourly. No, go back to the daily. All right, so this wave here was our first momentum wave, which set in this high. We had a second wave of price setting in a new high on price, but a lower high on momentum. And it also did it on the MACD. You can see the histogram was up, came up this high, but then when it swung up the second time, it was lower. So lower highs on oscillator, higher highs on price, bearish divergence. Now, I think that bearish divergence has already played out. It caused this surge back down. Now, the cool thing is it didn't even come into contact with the golden pocket right here. So to me, that's a sign that there's still a lot of interest to buy up around these prices. So you can see the length of the wick on there, and it caused somewhat of a reversal, at least for now. Hopefully we can keep that ball rolling. So this, I'm down on the hourly time frame now. This price action here is insane, like so choppy. Trying to trade through here is tricky. So I guess one way to sort of, swing trade or day trade this would be, we know that price tends to find resistance around the highs here, right? So we mark that off, that's a sell. And then we know price tends to find support around here. So that's like the buy side. So if we make this red, this one, that's how you trade ranges during like a choppy market. You buy the lows, you sell the highs, you buy the lows, you sell the highs until that range breaks. So at the moment, we're in this like sort of neutral zone at the moment, like sort of halfway between. We came up and got rejected. Potentially we're on our way back down to meet that buy zone again. But just be careful, because eventually these ranges do break, and fingers crossed we get a break to the upside and get a retest of these highs that we achieved few days ago, more than a week ago now. But yeah, late July I think that was, 31st of July. Had this really nice run up to 24,668. So yeah, that's pretty much the range that we've been stuck in. This boring range, pretty flat. You know, if we measure it from bottom to top, or top to bottom, either way, the percentage change from bottom to top here, it's only 5.5%, which is not massive. I mean, that's the extremes. The majority of the range has been traded in like here, which is 2.5%. So, yeah, pretty weak performance at the moment. It's just being squeezed like crazy. I bet you if we had Bollinger Bands on this and we went out to like the 4-hour chart, you would see that they have, there was probably expanded here like this, and then they probably would have squeezed those Bollinger Bands, squeezing like this. Let's see how on point that is. Let's dig out the Bollinger Bands. Okay, not quite. Let me see the time frame that we're working with. Maybe the daily? Okay, so yeah, the 4-hour seems to be the closest to what I was referring to there with the bands and the squeezing. But you can see we came off the back of this massive move up. So I guess the expansion was more like in this shape, and then it's come down and squeezed together, and we're really starting to squeeze down now. So something has to give. So is resistance going to give, or is support going to give? Are we going to go down or up? That's the big question. Let me turn those bands off, and we'll delete these zones. And let's check out, if we go to the weekly time frame, you can see these dotted yellow lines that I have here. These are super long-term trends. This comes all the way back from the COVID low, this drop here, 0.1, and then we've got our 2022 low, 0.2, link those up, produces this yellow line. Then we've got our all-time high from 2021. We've got our 2022 high of, well, the high that came off the back of this rip here, producing this trend line here. So they converge, the apex of these trends converge early October. So there's still some time before that apex, but price can still, rocket out of here, like either down or up. I think there's more upside potential. But yeah, price can certainly leave this structure well before then. Another part of this structure is a falling wedge, which looks something like this. So we've got this low here. It's a bit messy on the bottom side, but some people might draw it like that, or like, from there to there, or from here, and like, exclude some of that wick. But for the most part, this is the general price action sloping down, and we all know that a falling wedge is a bullish sign. It's a bullish pattern on a chart. So the resulting move would be a break of this trend line here. See, this trend line has only been in current since the all-time high last year, November last year. It hasn't even been 12 months that this trend line has been in play. Mind you, it's gonna produce resistance, but still, it's not as strong as the trend that has been creeping up since 2020, and I don't doubt that this goes back in time. Let's find a chart with a bit more price history on it. Potentially Bitstamp, if I can find that. There we go. Okay, so I'll draw it up again. We'll use infinity lines. So it goes something like this. Make them yellow, just like before. Okay, and we've got another infinity line. So the bottom of the COVID low, right down here, there. And our 2022 low, which was recently, right there. And let's go back and see if this lines up with any other price structure from the past. We might have to turn logarithmic on to see it. And look at that. Almost gets in contact with this point here. Might have to go to the weekly to fit more candles onto the screen. Yeah, look at that. Look, beautiful structure. Like, so you get contact as resistance here. Almost contact as support here. Big contact here, COVID dip. And then boom, you can see why we've landed where we have in the recent weeks. If I zoom right up on it. Why did we turn the corner right here? And I think it's because of that line, you know? So this is a multi-year support or trend line right here. To think that this is going to break first than just a line that's been in place since not even 12 months ago, I think this line here is the weaker, and that's why I'll make it dotted. So this one here, the solid line here, to see that breaking would be very, very bizarre, or it's less likely, I think, to see price fall below that trend. Not saying it can't happen, but it's not as likely as this one breaking overhead. So at the moment we seem to have a bit of last week was a bit of a doji week, which means indecision or equal pressure from above and below, which causes no move, no candle body. All you get is some wicks. We've just started a new week, so 7 days left on this candle, of course. So we're 2 minutes into it. Yeah, down 0.58% for the week on that candle. Very uneventful week it's been. It's been very flat. 1, 2, 3, 4, 5, 6, 7. So there's our week there. You can draw a box around that, and it's very boring. Doesn't do much at all. That's the week that was. 3, 4, 5, 6, 7. Yeah, 7 candles. Go down to the 4-hourly. Yeah, it's been very uneventful, boring, stuck in a range. We want to see this range broken. This week was awesome. If you go back here, grab, whoops, duplicate, there we go. So top of that week was up here, bottom down here, of course. So that is the kind of trading we want to see. We want to see that kind of volatility, not this flat, boring, stable crap. We don't want stability. We want activity. We want action. And then the week prior to this one was like not that amazing. It was like something like that. But if you turn on this trader's reality chart, it outlines the weeks as well. However, the delay, there's a delay of, like, it shows the last week, the previous week, in those, see these green rectangles here. Delete these. So this rectangle here, that shows the previous week's weekly range. Things got very flat through here. Yeah. So if you go down to the 4 hour, you can see the daily boxes as well. So the green box here is a weekly range, and then these blue boxes are the daily. So you can see volatility we've gone from these really tall rectangles down to the squeezing down on these to almost flat. And I think it's squeezing up and it's ready to do something big, hopefully to the upside. Hopefully we get that break. It's definitely coiling up to something. So the stock market, that opens in 13 and a half hours from now? Yeah, 13 and a half hours. So I think the next 13 and a half hours might be fairly uneventful. It's when the stock market gets going that you might see, volume start to step in. But so DC Woodworking says, "Hi Rick, is the moon phase playing out still in line?" Let's have a look at the moon phase. Yeah, that's a good question. So we're on the Bitstamp chart. Let's turn on that indicator. And I don't doubt it. I think every time there's a full moon, price goes up. Every time there's a new moon, price goes down. So yeah, we're due for a new moon soon. Sorry, a full moon. Let me just double check that that's the full moon mark. New moon mark. Okay. So that's coming up in a couple of days, I think. Full moon. Let me just check the dates. August 11th. So if I go down right here is when that full moon hits. Right there. So if a new moon produces a downswing, which it kind of has, we've already started to turn the corner. If this holds as our low and we've got like an inverse head and shoulders here, like that, then the rest of this new moon cycle may produce, at least action that goes flat. Like it might be a few more days before we see a pop. But yeah, hopefully. This was a very nice reaction to the full moon. Bang, right up. Just for the fun of it, let's go back in time and have a quick look. I'll turn log off as well. Logarithmic off. Okay. Yeah, this one's a bit of a wash. That's a no-go, this zone here. Very choppy. I think fundamental things were happening to basically throw the moon influence out the window. This new moon cycle certainly produced a downtrend. Choppy market, flat for this full moon cycle. Yeah, new moon downtrend. Cool. So we'll leave these arrows here. Down, down. So this was a wash as well. It's just choppy. Choppy. Nothing happening there. Definitely downtrend here. Definitely up on that full moon. But can you see the pattern here is that a full moon is less likely to produce a downtrend. This new moon cycle, yeah. This full moon actually started out quite negatively. So yeah, but there was a hell of a bounce back to the start. So that was, I'm going to call that a wash as well. But yeah, maybe there's a bias to downside on that one, that cycle. So you can see it's not perfect. It's not like the perfect indication of what's to come. But yeah, look at this. If this new moon cycle produced a bullish cycle, and this full moon produced a move to the downside. So it can happen on the contrary as well. But if you were to look back through 5 years worth of data, I think you would find that the new moons produce a downtrend and the full moons produce an uptrend, or positive price action for the full moon. Who knows why? But I know that it was happening quite on the money, like on rhythm back here. Yeah, through the bull market. Every full moon produced a beautiful up movement. This was a bit of a wash. That was a wash. This one was nice. Okay, new moon down, 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 new moon. Bit of both. That was a wash. New moon down, full moon up. So yeah, it really, that was a bit, that was more up. So that was it's a bit of a question mark on that one. Bit of a wash. Nah. Yeah, up. Wrong. Anyway, yeah, there was a lot of confluence with the moon indicator through the bull market. You can see that. So yeah, it's the strike rate of it. I don't know. I'd love to know what it is as a percentage. I think more than 50%. It sort of calls the cycle. More than 50% of the time it gets it right. So probably more than 70, maybe. There's probably a few other factors that come into play as to whether that cycle's going to play out as expected. But the moon phase had an 80% hit rate at one point. Oh, that's interesting. Yeah. I mean, I think there's something to it. There has to be something to it, like for it to do that. But yeah, it's not perfect. Nothing's perfect. No indicator is going to tell you exactly what's going to happen. But I think this is very interesting to have bullish market activity during a full moon. It's like we're all werewolves or something like that. All right. Yeah, so when there's no moon influence, like when it's just a new moon, people don't really tend to be that bullish. You know, I think perhaps like, you know, the negative price action, I don't know. Not sure what I'm going to say there, but anyway, we'll move on. Yeah, interesting times right now. We've got a few things lining up here. Let me go to the daily chart. So we've just come off the back of this bearish divergence, producing this little dip here. But you can see there's a momentum shift, that green dot on the cipher indicator, which indicates this little rally here. Mind you, it's been a very flat rally. Nothing has really eventuated from it. So things are kind of just like neutral right now, waiting for the market maker to decide the direction, you know? Yeah, that's where we're at. Let's go back to, I'm going to go back to my other chart. Let's save this on the daily. This is our moon Bitstamp chart. And by the way, Ethereum has been looking healthy. It's had its pullbacks for sure, but for the most part, it's performing better than Bitcoin out of this, you know, supposed bottom, market bottom. It's already come out of its, you know, ascending structure here. It's broken out. It's dealing with resistance now at 1800. Once it gets above 1800, you know, that's basically the bottom of this range here that we were trading in May. So yeah, it's looking pretty good for Ethereum. It's poised to potentially come up and test the bottom of that range again and maybe even break through it. We'll see how it goes. It seems to be doing its own thing, regardless of what Bitcoin's doing. Ethereum seems to be one of the few cryptos that perform outside of the influence of Bitcoin. And even with the EGLD, that chart we looked at earlier on in the stream, that looks to be doing its own thing as well, which is cool. But let's go back to Bitcoin here. I'm sure nothing much has happened yet, as it's only 16 minutes into the day. But so far, look at that. We're swinging back up. This is the daily, the start of the new day, the new week. We're rocketing back up, recovering all of this pullback that we've just experienced. And let's see if we can get a test of this blue line. This is our resistance structure that we've been fighting for like over a week now. When did we dip below it? Let's have a look. Yeah, 7 days, 2 hours ago, pretty much. We didn't spend a hell of a lot of time above it. Only that little blob of time, which if we mark that up, what's that measure? 3 days, 7 hours, so not that long above the blue line. You can see why the top of this range was set, and it was, check out the resistance there, that big reaction off that line. Big reaction of support here, here, and here. And then, yeah, once we get below it, it causes massive resistance. So it was a big deal to break above it. A lot of people would have got trapped being overly optimistic that we broke back above, but we didn't get those candle closes, you know, convincingly above that price range. So why the hell this line? Why does this exist here? Like what significance? Let's go back and see if there's any kind of other interactions with it. So nothing through here really. Nothing through here. Little bit of one here, but it didn't quite come up and touch it. This was during the bloodshed of the late May. We might have to go a fair way back to see if there's any history with that line. Just zoom in here. So it's pretty much like a point of control from this part of the market back here when we were coming up in December of 2020. There's a lot of price action around that blue line. So it's definitely a point of control. So it is a bit of a hurdle in the road, and that is where we're currently trying to fight to get back above. There's a chance that it could be a moving average of some description, whether it's an exponential one or a simple moving average. Let's turn on an SMA. Moving average. Maybe the 200. Oh, not the 9200. And style, let's make it yellow just so we can see it. Now this is the 200 daily. Let's get the weekly, which is going to be a bit lower on the chart. Time frame, the 1 week. So the 200 weekly simple moving average. Look at that. We're above it. Got a bit scary there. We dipped below it. We got some candle closes and opens below it. But we're back up on top of it. We've come up, retested the 200 weekly moving average, and now we're getting positive price action again. So that could be what's gonna assist us with breaking through this multi-day resistance of 23,450. Let's just call it 23.5. So it's basically the middle of the road between our 23 and 24 big round price numbers. So if we go back to the daily, or sorry, the 1 hour, that's our 200 weekly moving average that we're sort of finding support on top of. And it's, you know, we're ever so slightly getting higher lows, which is good, positive. Higher, 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 and higher again. So, yeah, I don't know, it's just, I think it's going to be a big deal if we can get above this blue dotted line, maybe even back test it, find support, and then once we establish that as support, we can start attacking the next level. So this orange zone here is the resistance. That's the golden pocket from this move here. So from this high measured down to that low, that is the golden pocket of resistance of that move. So getting back above that's going to be challenging as well, but I don't doubt we can't do it. I mean, I don't doubt that we can, sorry. All right, let's go find that strategy that we were using, that cipher strategy. It was a 4-hour time frame cipher B indicator using $1,000 hypothetically, buying on green dots, selling on red dots, dollar cost averaging up to 3 times. So if we get 3 signals to buy, we do it. So 4-hour chart we need. Let's zoom in. We bought on the first dot here. We got a second dot here on this big green candle after seeing that dip. So let's say, hey, it seems to be coming out at the same level as our first buy, but hey, let's just do what it says. Let's put our second buy there. So that puts our position pretty much at the same spot, but we're just in heavier this time. I have to unlock it first. Oops. I want to duplicate it. There we go. So our second buy came in roughly here. So we're about, let's duplicate this little label here as well. Call it buy 2. So I think, what was it we were saying? Was it 100, 200, 700? Yeah. So 100. And then you double it. So we're now $300 invested long. And then if it does, for some reason, drop, you know, let's say it gets rejected off this, comes down, rolls back down, breaks supports, you know, whatever, comes back down to test like 21K or 20K, it's most likely going to produce a buy signal on the cipher indicator. And that's where the third buy would come in for 700, making up 1,000 total that we're in. But just the way the market structure is right now, I think we're probably not going to be able to put that extra 700 into this trade, hypothetically. So we're in 300 deep. So far we're in profit by probably not that much. It's been pretty flat lately, but if we take a measure roughly from where those dots are, we're almost 2% up. If we measure it to the top of that wick, 2% up. So if we can break through that blue line, we're gonna really start to grow some profit off those positions. And then, you know, selling on, remember, the red sell dots. Now, the way you exit the trade, it's really up to you. Like during a bear market, you know, taking profit where you can is smart. Like if you're in profit, take it, because you don't know. There's not a strong trend right now in either direction. It's kind of flat, with a slight bias to the bull side because of the higher lows and higher highs. But I think, yeah, if you come into any kind of profit, then that's awesome. You know, take it off the table. But you know, you've probably got your own strategies, and you know, do what you want to do at the end of the day. These are just ideas, different approaches to how to swing trade the current market. So yeah, that's the update for the strategy. So we're currently we're riding the momentum. So the momentum's heading up on the 4-hour. You can see that here. Hopefully it produces a nice healthy wave, like that. We'll see how we go. There's any chance, there's always a chance that it comes up and you get a red dot here and it dips back down again. So these momentum things aren't really going to tell you the future. They're just sort of reporting what has happened. But we know that the trajectory, the direction currently, as at this moment in time, is heading up, as we can see. So that's good. No indication yet that it's, you know, part of an unhealthy move that needs to come back and correct. There's no like bearish divergence, nothing like that yet. We've come off the back of bullish divergence, actually. You can see here this green line of these momentum waves. So we've got higher lows, but lower lows on price. Higher lows on oscillator, lower lows on price. So bullish divergence, which has produced this right shoulder, this inverse head and shoulders. All right, let's put this strategy. Make sure that we put it in the right spot. We want it to go in this cipher strategy. Oh, good, it is. It already is. Excellent. I'm going to label these properly. So this is buy 2. And this is buy 2. Cool. Lock that, hide it, and we'll revisit that, you know, whenever we get some price action updates, like some sell signals perhaps. We'll come back and see, oh look, this is where we took profit on the hypothetical cipher indicator. So far, like it's coming through with the goods, this cipher indicator on the 4-hour, you know, for telling you where to dollar cost enter and to dollar cost exit. So these are entries here, these 3 dots down here, and these 5 dots up here are exit sells. So, you know, you can average entering and exiting. You don't have to do it all on one dot. So if, you know, this was a buy, and then we have there's another one down here, which happened pretty close. Actually, sorry, here was the second, that was the third. And then this one up here, that was the first. So first, second, third, putting us at an average of around probably like here somewhere. And then the sells came in. One came up here. Another one came up here. Another one through this structure here. And then another one here. There was a few, there was 5 of them. Yeah, so averaging out, who knows? Like, you don't know if you're in store for just one signal and then a violent dip, or a whole bunch of signals that stay, keep the price up. It's really hard to say. So yeah, it's up to you if you want to average out, but going 100% out on the first signal of a reversal it's not stupid. I think it's smart. I think it's reasonable. Who cares if you missed out on potential further moves up? You secured profit, which is what we want to do as traders long term. It's better to take profit on most of your trades as they come. Over time, you accumulate and you collect profit. Whereas if you were to just hold it and just wait, those positions can turn negative and you can end up losing money over time. If you were to do that over a period of time, your average would reduce, you'd go down. So taking profit where you can is not a bad thing, I think. So profit taking's like the less difficult of the two things you have to do. Entering a position at the right time is the hardest thing. Choosing where to get in, that's why dollar cost averaging in makes more sense. Like it's a pretty decent strategy to get into a position. But exiting, yeah, do what you like. All right, I think I'm repeating myself a bit too much on that. Yeah, still a lot of back and forth. It's been like that for the last week. It's very frustrating to watch. This chop, just this range, chopping indecision, Most traders, most professional traders would say they don't trade that kind of price action. No, thank you. It's too indecisive. It can go either way during structure like that, a ranging structure. And it's not worth it. Like it's only 2.5%. But yeah, if you're desperate, go for it. If you can try and identify where the highs and the lows are of the range, then yeah, go for it. Yeah, grid bots, exactly. Consumer 76. So if I draw a range around where we're at, I think that it's fair to say that the top of the range is roughly where the blue line is, and the bottom of the range is something like that. This is the exception. That's the exception there, and this is an exception here. So, but I think we've captured the bulk of the price history in that box from the last week or so, a few days. And then I'm going to post a poll. Who thinks we're going to break out to the top side of this range, and who thinks we're going to break down to the bottom side? So I'll draw up a poll right now. Will we break, or let's ask it this way: which direction will we break out of this range? Say up or down? See what you guys think. So there's only about 30 people watching, so we're not going to get a massive sample. But we'll see how it goes. So cast your votes. Up or down? It's a hard one. It's difficult to say because it's so sideways, isn't it? There's no real bias. I guess you could say like long term we've had higher lows, so there's a slight bull bias there, but yeah. I know which way I want it to break. I want to see it break up and make new highs, but yeah, it just really depends. So 11 people have voted so far. Most of you are saying up. Some people are expecting it to go down out of this range. Well, some of you are right. Someone has the answer in this poll. Or a few of you do. But yeah, this range, it's been very boring. Hopefully it doesn't go on forever. When's the last time we did get stuck in a range? I mean, we were kind of in one back here. It was like a high side range for like 3 days, I think. Something like that. Where we had, you know, breaks below it and then breaks above it, but for the most part stayed flat. There was a range back here as well. Which saw, you know, fake outs on the bottom side, but eventually, yep, we broke the range, headed crazy up. But yeah, you can draw ranges all over the place. You can find them. Wherever things go flat, boring, the volatility goes down. Usually it's a Saturday or Sunday that price gets stuck in a range. But yeah, this is a very long and nasty range. Like, jeez. And it also happens on the macro as well, doesn't it? Like we've got... Yeah, we had this one that we were following, we were tracking. Something like that. We had our obvious exception to that range. Broke below it, broke above it for some time, but technically we're somewhat still in this range. We're on the upper side of it and potentially finding support on top. But that might be what's happening at the moment, you know? Get the right tool here. So let me just delete this for a second, and this one. If I drag this across, you can see the old range that we were stuck in got broken. We saw price action above it, but then we got sucked straight back down below it. But then we came convincingly up, broke it, made a new high, like a higher high here, and we have seemingly found support on top of that range, which coincides with the 200 weekly moving average. See? Check out that rejection on the 200 weekly back here. See that? Right there. Bang. Rejected. Rejected somewhat again here by the 200 weekly moving average. Yeah, so we've been riding this 200 weekly moving average as support for the last 8 days, roughly. I think it's significant. that we're doing that. I think that's a sign that things are looking bullish, at least for now. If we lose that support from the 200 weekly, then that's kind of scary. That's kind of bearish. We might have to try and rely on this channel again for support. And also, there's a few confluences here of support if we do break down. There's the golden pocket. That's the first one. There's the bottom of this channel. That's the second one. There's also the previous resistance levels here and here. That's the third one. So there's like a triple confluence of support. And there's also the fact that it's a big round number, $22,000. That's a fourth confluence of support. So pretty strong support at that range. But we're also dealing with resistance. There's many factors that are seemingly holding us back, and that is low volume, so people are still fearful. There's not a lot of retail stepping in at this time. There's previous levels of resistance here. Seemingly this blue line is causing us resistance right now. Yeah, it's a few factors on both sides, but that's probably why we're going so flat right now, is because there's a lot of pressure on the support side and a lot of pressure on the resistance side as well, squeezing us down. So something has to give, and we're going to pop at some point soon. So we'll keep an eye on it and see how it goes. Momentum on this indicator here is still looking good, the 4 hourly. Things are heading north. There's a lot of sell pressure still. You can see that the length of these 3 4-hourly wicks, these 3 4-hourly candles producing these crazy wicks here, that sort of indicates that there's a lot of fear at this level. People want to sell or go short once price reaches the top of the range, which is probably a smart idea. I mean, people selling the top of the range and then buying the bottom of the range, and then just rinse and repeat. It's like like that guy said, it's like a grid bot's favorite market conditions. So there's something for you to do. Turn your grid bots on when the market is ranging and going sideways. There's always something to do. If you get high volatility, trade it. At leverage if you're prepared, or if you feel comfortable trading on leverage, then yeah, take advantage of these big swings. And don't be scared to go short. I'm still scared to go short, but I've got to get used to that. I've got to get used to playing both directions, just so I'm not wasting time and missing out on potential gains. But yeah, there was a lot of signaling on the 4-hour chart here that was indicating, hey, things are going to turn around here soon. You had a huge sell signal, a big red dot saying sell here. You had bearish divergence, another fairly red signal here to sell, and that was right here and here as well. So that's higher high in price, lower high on the oscillator. So you can certainly see that on the MACD. So this was the first high, and that was our second high, which actually went higher on price. So that's violent bearish divergence right there. So that is a big signal. Oh yeah, it's pretty safe to go short at that spot, or to sell if you were riding along from down here or here. And then yeah, you get similar kind of signals on the bottom side. You get bullish divergence, you get big fat buy signals as well on the cipher indicator. Check out this golden buy. See that one there, that golden dot? That's when the cipher indicator is very sure about things, or more confident. It's a level of confidence. And, you know, not to mention all of the bullish divergence that was going on as well after that violent drop. But yeah, that produced a really nice entry, golden entry. So you could still technically be writing that entry, that golden entry. Yeah, if you go back through time, you can see other examples of golden buys, like here. Mind you, buying in a bear market is kind of scary, I know. But if you're trading it, yeah, like that's a golden entry there. Producing, you know, a move up. How many other golden entries were there? There's one here, which actually is kind of sketchy because look, got a drop not that long later. So you had to get rid of that quickly. That one. So yeah, when you're trading, it does pay to keep an eye on things. Did we get any golden entries back here? No. It's all pretty quiet on the cipher indicator. The golden buys have come through here, through this, like after we've seen so much downturn. But yeah, there's still a lot of good solid buys through here. I reckon if we look on the Bitstamp chart, then you'll see different story. Let's go to the 4-hour again. There's our golden buy opportunities. They happen after violent dips, you can see. So we didn't really have any violent dips. I'm just surprised that even the COVID drop didn't produce a golden buy signal. It produced a really fat green signal though, which is still good. But yeah, that's as far as the 4-hourly chart data goes. If we go to the daily, let's see if there's any golden. No. Oh, one back here, seemingly. There. Really random spot. It kind of makes you wonder what are the conditions that need to be met for a golden dot to appear. What are those conditions? So we've looked at the daily and the 4-hourly for those signals. Let's go back to the hourly. You probably see them all over the place. One here. One here. Golden. One there. That's kind of sketchy. Didn't produce anything. One here. Yeah, not bad. Not bad. It was flat. Sometimes these green ones are better. You know, they produce better results than the golden ones. Oh, this is a good one. It was pretty confident on that drop that there would be a rise to come. This was a bad one. But yeah, that's going long in a bear market for you. You know, it can be risky. There's one, a golden. Yeah, alright. That's enough of that. What's happening right now? Crazy. So this volatility is it's really starting to get noisy now. See, yesterday was really boring. It was just price seemed to be, quite stuck and squeezed. We had this violent drop here, which was a good thing because that shook the market back up again, so that we could get some actual movement, relatively speaking. You can see the zigzags are taller here, as opposed to this flat channel that we were stuck in. And that's what you want as a trader. You want volatility, you want movement, you want differential in price. You don't want stagnation, you don't want things to be stable. You may as well be trading tether if you prefer that. But yeah, that's where things are at. So the poll's looking good. Which direction will we break out of this range? 64% of people saying up. I tend to agree. I've got a bit of a bias to the upside at the moment. And yeah, we'll see how that goes. 25 people voted. That's pretty good. Not bad. Anyway, I think I'm going to wrap it up there. The USA is going to bed soon. It's 8:50 p.m. Eastern. So I think things tend to go kind of quiet during that time, that 12-hour stretch between when you go to bed and wake up. So enjoy your sleep. Not much happens over the weekend, not much happens after hours. Most of the activity happens when the stock market is active and trading and moving. So that's when it's worth looking for opportunities, I think. But that's it. All right, guys. Thanks for tuning in, and I'll catch you on the next one. Hopefully it's sooner rather than later. Hopefully we get some action in the coming hours or days. All right. Take care of yourselves, and I'll see you next time.